real value, the person will think about the customer right now to save them.
Okay, that is another issue we're gonna talk about that. When we talk about the assets, and also we talk about tax saving, right? Right now we have two major issues. Under what kind of condition or under what kind of situation, A may think about the transferring of the assets to B. But the end result is A want to save the tax. If A can save more tax, that means B can receive more. That is bottom line. Understand? A and B could be treated as one party. Both of them would have to save the tax. And there's another issue. In order to save the tax, anyway we can configure the assets. The assets could be like cash, could be like a bank account, could be like any valuable assets, the gold, silver, jewelry, could be like the estate. And the last one is the one she just asked. How about company? Could be the corporation, like stock, could be like a partnership, could be like LLC. For example, we talked about this from last time. Very simple way for the family is to organize LLC, right? You put your property like a real estate under the LLC, and this may be the better way, because if you don't change the title, you only change the share, you only change the LLC interest. And number one, if A transfer the assets or the interest, I don't want to say assets, if the property, the real estate is under the name of LLC, not under the name of A, and if A want to transfer the assets to B, they don't change the title. It's not like A to B, because the title still keep the same under the LLC. And the only thing they need to do is just write the memo. They have the meeting, and they have the minutes, and they just keep the record, say, on certain day, A's interest for the LLC and transfer to B, right? So under the title still the same, no any title change. Title always keep as like LLC. However, the underneath the interest change, and you can save a lot of tax, not just the gift tax, property, transfer tax, anything related to the real estate. So this is a very good point. Okay, for chapter 12, it's more like tax planning. It's more like tax planning. You need to do some kind of planning before you change or transfer your interest or your assets to somebody else. Then try to save the maximum tax. Try to avoid the tax consequence. All right, so we have at least 3 topics we can talk. And the first one is we think about that under what kind of situation A may consider to transfer the assets to B. We will spend a little bit of time talk about that. Right now we have one situation that is from parents to children, or say from grandparents to grandchildren. That's number one. All right. We will talk about the assets method, say to form organization, family, business, family corporation, family LLC, family partnership. And then lastly, we will talk about probably 501c3 donation. Okay, we'll talk about that. Family foundation. We'll spend a little time to talk about the family foundation. Yeah, go ahead.
Yeah, Professor. We talked about